Could Okta be the next big breakout stock? In this video, we're going to be trying to find out exactly this. I have inspiration from this video from Felix and friends. The video will be in the top right of this video now. Before we get into this, I'm not a financial advisor. None of this is financial advice. It is just my own personal opinions from what my research says. So what is Okta and what do they specialize in? Okta is a cloud-based and identity access management platform. It provides tools and services to securely connect people with applications, devices, and data. Okta is widely used by organizations to streamline authentication and improve security. So it's essentially a secure network with some of their attributes being a single sign-on service which allows users to log on once and access multiple applications securely without needing to log on separately to each one. I know that this will have massive benefit for a lot of large organizations in which use one huge server for a almost virtual network. So why do I think Okta will be the next big stock? Okta listed on the NASDAQ under the ticker symbol Okta, which is a bit of a shock. Recently reported strong financial reports for the Q3 fiscal year 2025, the company posted revenues of $665 million, marking a 13.9% year-over-year growth. Driven primarily by increased subscription sales, the stock has seen positive momentum due to earnings exceeding market expectations. Okta's free cash flow for the fiscal year 2025 is positive and is projected at $700 million, so that is really positive as it means that they can't essentially go into liquidation as they have free cash flow. With a focus on long-term marginal improvements targeting 29% by fiscal year 26. Analysts have adjusted target price upwards following strong performance and improving guidance. So now we're going to take a look at the financials for Okta. We're going to be putting their data into my system. This will allow us to see moving averages, the previous 5 earning reports, and compare them all and see what the trend lines are saying. So having a look at the liquidity ratio for Okta, this is incredibly positive with it being well above the ideal situation of it being 1. This means that for every dollar of debt in which they owe, they at least have over $1 of liquid cash to pay this back in. This has, however, started to fall in the last 5 quarters. However, looking at the trend lines, it predicts this to start rising again. So this is really, really impressive. When we move over to the retention rate, this shows how much money is retained within the company after taking away their losses. We can see that they broke profit around the Q2 for this year. So it is still very early days for profit margins for Okta. They are currently at a 2.4% retention rate. You ideally want to be seeing this rise up to around the 10% mark. There is still time for this, of course, as it is early days for the company. This could also be a positive thing as it shows that we are getting in before it is almost a trend. However, it could still be way too early for the stock. That is important to say. I'm not saying that it's time to get in now. I'm just saying that this has high potential in the future. But we will try and figure that out later on. And as I mentioned, they have a strong free cash flow, with this being around the 154. When you times this by 1,000, they got over $1 million of free cash flow, which is incredible. The trend lines are expecting the difference to increase between operating and free cash flow. However, they are also expecting the free cash flow to decline. But this is not an issue at all, as this is actually an incredible amount of free cash flow for a company of this level. Now looking at a 365 exponential chart, this can be seen as the 52-week moving average. We can see that currently we are just above the 52-week moving average, which is very bullish, and we are also above the 52-week moving average for volume, which is a bit bearish. Looking at this on a smaller scale, on a 91-day basis, we can see that we are also above the 52-week moving average for price, and we are just about on it for the volume. Okta have a PE ratio as 0 on this system, a 52-week high of $114, a low of 70, that being a difference of 43. The current price is at 85. On a beta rate, they are at 1.01. That means they outperform the NASDAQ on a volatility scale of 1.01 times, so it's not a massively volatile stock recently. Looking at the average volume to current volume, we are, as we've just seen, on the 52-week moving average. On the 92-week, we are just about below the average. On this, we are showing that we are pretty much half of the average. So that is, I mean, that it is what it is. It doesn't really tell us a massive amount. It tells us that volume is currently low. So what has the past done for Okta? As we can see here, around 2021, which I'm marking now, Okta just had a huge decline. During the pandemic, Okta was very, very needed and had a huge market boost due to many people wondering how they're going to be doing their work from home, and Okta offered solutions for this. So the drop was due to many factors, including a combination of costs related to acquisitions, earning miss and guidance. Okta reported weaker than expected earnings at times, coupled with conservative guidance, and broad market rotations from growth stocks to value stocks amid rising interest rates weighed on tech companies, including Okta. Sorry, I keep trying to say Okta, and other companies such as Carvana, or the likes of, there's one more that I've got in my head and I can't think of. I need to think of this now. DocuSign, that was the one. They all seem to have a fall around this time due to this broad market rotation. So Okta is not without competition. It does have a massive competition in the likes of Microsoft, which you would think is absolutely awful to have competition with. However, there are a few light patches for Okta. I keep trying to say Oscar. Such as Okta specializes in independent identity and access management solutions, offering robust tools like SSO and MFA across diverse platforms. On the other hand, you have Microsoft. They do have their brand identity and a tightly integrated ecosystem. However, this could be a huge downfall for them, as their product is mostly suited for organizations that are already heavily invested within Microsoft's products. This could be seen as a negative if you are looking to diversify. And if you are looking to diversify, you're more likely to go to Okta. However, it is important to say that Microsoft's system is free, I believe, and you will have to pay a small fee if you are a company to Okta, but it is a more rounded system and it is what they primarily focus on. You don't have the synonymous name of Microsoft, but you do have the freedom of using whatever service and products you like alongside of it. So it does have its own competition, but there is potential upside. Again, I would like to say, I'm not saying go out and buy this stock. I'm just saying it has potential. Let's find out if it's a good time to buy. So as of right now, we are well above the 7, 30, 50 and 100 day moving averages, and we are just below the 200 day moving average. Ideally, before you buy this, you want this 200 day moving average to be below your price. So for me right now, I won't be buying in until I see this, but also it is also very important to say we have seen this side trend going on since about 2023, with Okta actually being down 5.55% on the year-to-date chart. But it, as I've just seen from that Felix channel, again, I am learning with you guys with this. Side patterns are quite important because people will tend to buy in around here and then get very bored of the market and actually frustrated and sell off. So by the time we do eventually see an uprise here, all of the people that wanted to sell should have already sold. But again, it will just be a question as to when that will be. I haven't got a clue, but it could be in the relatively near future, as this is following trends like Carvana and SoFi and Palantir. There is a lot of side momentum, and then all of a sudden you get a big spike. But again, I'm not a financial advisor. So I think that's just about everything I wanted to say with Okta. It's definitely a stock to watch. If you have enjoyed this video, please do leave a like and subscribe. I have actually hit 300 subscribers now, so thank you all for that. I'm now aiming for 400 by the end of the year, and we're actually getting a lot of momentum at the moment with the subscriptions, so thank you very much for that. With that being said, I'm going to end this here. Again, I'm not a financial advisor, sorry, not subscriber. You should always do your own research before buying into a stock. And with that being said, I will see you for the next video.